Well, good morning, everyone. Hey, it's Shooter Scott Henderson. Going to go over Tesla this morning. Actually, not feeling that well, so I'm just going to stay light going into this week. Market conditions warrant that. So let's jump into this. Of course, please do look at our disclosures at the end of this presentation. Now, you will not hear this very often from me, but literally, I went through 3 times as many symbols between yesterday and this morning, and everything just looks bearish. I posted the SMH chart in fundamental trends in the ETF chat, my comment was that if this unwinds, look out, basically, because we got some significant downside if that's the case, and the count does support that move. So my bias is that we continue lower, sort of stay in this range. We're not going to handle good news unless it's, superb. I think some of the earnings last week was sort of indicative of that kind of response. So, last week, the only trade we took was Tesla. It worked out for us. This week, earnings, not a lot there that even interests me. ASO, if it holds up, but I think it breaks down. I think with Big Lots filing its BK or supposedly filing its BK is just going to take all of retail down. Now, Restoration Hardware on Friday might do well. And even GME on Tuesday after the close might be decent, but nothing that I really want to chase, okay? So there really are 3 stocks that I'm watching this week. PLTR, 4, and Tesla. I'm already in Tesla. I'm looking at this round 2. Now, with the market sentiment, momentum, where we are, I still look at this as a lotto. So I want to make sure I address that, even though I've posted that in chat. So, but we break down the conditions here. 230 calls were pretty decent. Paid, I think it was 112 contract. Went with the 213s. I saw no reason to go further out in time. Keep my risk to a specific number. That way, if the market goes against us, I'm out. If I lose $100 a contract, I'm not worried. That basically is the thought. So let's take a look at the chart. So we're looking for this 50 back at 226. Now, I didn't keep the fib up here, but we have a 246, like 53 as a 61.8 fib if we measure this entire leg from here, and here, which is a likely target as well. That's 78.6 at 251.95. So if we can get going here, we came off with the markets was what, glad we covered when we did, because we would have gotten totally pummeled, which is the concern. Where we get the bid, in other words, they're buying into this with large block, and then they're pulling the order. So that's what you're seeing right there in the Tesla candles. You had a number of traders in Tesla who were going long and they pulled their order. So hopefully that's not something that continues. However, in a corrective wave like we've been in, it does occur more often than not. So, that's one reason, I like 213.50 actually as a stop better than the 210.51, but I can't justify anything below other than the candles low. That's just the strategy that you really, bottom line is it can be in that range between 210.51 and 215, and it's done nothing wrong and still hit our target. So, but that's what I've got for this week, folks. Great trading. If I see anything else, I'll post another one later in the week. But outside of that, until next time, folks.